Welcome to our live FB for the 26th of January. It's 9:30. Thank you for coming. As I said before, tonight I'm going to have a very good information pack and leaving you with couple of tips how to stay ahead. And most probably is many of you are really wondering what's really happening in the overall US market as well in the Malaysian market. Of course, the Malaysian market react differently from what we've seen from the US market. So I will definitely cover the two side of this picture in here at least by the end of this 1 hour live FB. Many of you would have known or at least gather, there is a little bit of opportunity, or maybe I should just totally avoid the overall stock market and come back next year in 2023, or maybe I should put my money in something else, right? So this is going to be quite interesting as I've gathered all the information in here, and what you will see will definitely be the top quality analysis that many of you may have heard. And of course, don't forget our February intake for our masterclass, which is our flagship product where we train many of you to become very proficient trader and investor that have done very well and continue to do so in the coming years. Little bit of investment out front, but pay plenty of dividend with our cost. Of course, this is our usual disclaimer in here. Some of the stocks that we talk about are maybe something that I hold before. Of course, a very happy Chinese New Year, 恭喜发财 for year 2022. And many of you would have known we will only have the year of Tiger on the February 4th. Is what we call the Lap Chun, and that also coincides with Beijing Olympics, right? Beijing Olympics starts on February 4th, which is actually the year of Tiger. So during that time, we'll be taking a break, right, for the Chinese New Year festivities, as I do celebrate with my family and my children in here. And today, this will be my last live FB talk, and on Friday I'll be taking a leave, but I'll be back the week after the Chinese New Year, and I do hope that during that time, especially our members and yourself, you all can actually look at the market in a time perspective, perhaps checking also the US market, because many of you may have time in here, but I will still be looking at the market. I suppose that's in my blood and in my life, what I've been doing for the last 10-15 years. Okay, so happy Chinese New Year to all of you in here. And I need to mention we have our special in here before the 30th of January, our Chinese New Year combo plan, free 3 months, and those of you who subscribe to our 12 months get additional free 2 months. And that's the one, many of the tools that we will talk about tonight, including our sneak preview for our latest indicator. That's something I will share with you also, that we will also do to launch in the February intake just after Chinese New Year. That's the one you'll be getting, this sneak preview of our new indicator that will pretty much sums up what we want to talk about here. So don't forget, the Chinese New Year promotion still ongoing, valid until 30th of January. Of course, don't forget to subscribe to our YouTube channel, and tonight's video will also be archived in here. And our KLSE app, SmartRobie here, continue to have new features. Definitely one of them are watch list. Some of you may have used it and use that for any alert of the Pentagon Guider as well as the US market and SGS market in here. And tonight, our live FB, some of the things we'll be talking about is what has happened to the KLSE and also in the US market, likely to happen in 2022. So I'll probably give you a breakdown what we have seen so far right now in January in here, sector analysis to watch for in 2022, and the safest stock right now to look at, right? I think some of you may have known what kind of sector I'll be talking about, and also a new simple and easy way to enter after a market correction, and that's what we are looking for, that reversal. And not to forget, with our Trade VSA market stages analysis that we just launched previously in here, we will introduce our new indicator, a sneak preview. That's right, first time in here after what we did last week on our showcase Trade VSA is our peak valley line introduction, right? That's the one I'll be showcasing you in there. And if you have any stocks you want me to look at, definitely the peak valley line introduction will put you in the right way. All right, now if you look back in the timeline, what we have seen so far, I just need to move my head a bit here. You could see this one is December 15. Okay, December 15 was the US Fed signal the interest rate cut. So it's almost been more than a month, and we have seen right now, after the signal, the Fed cuts, when every analyst talks about in here, we have seen the almost 10% to 12% correction that we see in the US market. Of course, our market also corrected, which we're going to go to it. But if you look back throughout the whole of 2021 timeline, this was updated on the 21st of December. You can see many events that was happening in here, but so much so that the market, the KLSE market, really not going anywhere. You see Bursa Tech hit new high and then corrected, right? And then you have the Air Asia event, and also more recent is the Genting Hong Kong, which defaulting on one of the bonds and probably going to bankruptcy. And that's kind of sad, all things being said. A lot of the events that happened too, and definitely Rubber Glove has been one of those stocks that has sort of caused many of you who are still holding Rubber Glove and happen to trying to find what is the best way to do. But trust me, I think it's always good to dispose some of your Rubber Glove, sell half of it. If you cannot sell quarter of it, release those funds and use those funds for better opportunity if you can spot a market bottom, right? That's right. Rubber Glove, remember, it will come back, but it will take some time to come back. Then the question is, what about the opportunity? Now, every year, if you miss that time, there is opportunity cost. Remember, time is money, and you are with me tonight. So definitely, you want to put good use of your time in the right technique, and something that you want to consider joining our February intake. That's a time where you will put in the right thinking, getting the right education and support from all of us, and able to understand some of the things we talk about tonight. Now, if you look at the KLCI buy and hold, what you see on my chart in here is the VSA 360 monthly seasonal. Many of you have seen this, have used this again, and this to me is one of the best tools in town right now to know where is likelihood the month to be buying. And I'll probably say that if you see from where we are, January month has always been 3%, 3 to 7% fall, right? You can see our KLCI in here, but where is the recovery, right? It's on February, that's right. So if you look back 2019, with the exception of 2018, we had many of the worst performing months in January, so you do know. And then guess what? December, right? We always know that December was the best month, and we all know on the last day of 31st of December, the market just shot up to 50 points, and then finally it corrected. That's why we saw the correction in here. Now, like it or not, history is very important. Anyone who do not pay attention to history, right, will pay dearly in here. And that's why we have this seasonal month for you, so you can use it in the VSA 360. And if you wish to get hold a copy of it, there is a number right at the below there. You can contact us and get hold of this VSA 360 in here. And many of you may have used this before and definitely know that this is one of the best tools around to look at the market in here. And it does tell you, to me, the best time to be looking at probably will be a little bit of February, but March onward, April onward for KLCI to pretty much hold it. What does that mean? Now, that is definitely going to be depends on the strategy that you'll be using, what kind of strategy you'll be using, whether you want to be doing a portfolio of trading. If you are trading, definitely in our intraday. Remember, I covered this last Friday on our Showcase VSA, how to make income for intraday trading using our VSA 360 intraday alert. Lots of great benefit in here for one price, one promotion, one education. Okay, let's go on to next. Now, the question has always been how to enter a market with some sort of safety margin. What do you think? Give it a think. How to best enter a market with safety margin. Now, of course, many of the public, and including myself, when I first started this, we always wait for the sifu to tell me first. Correct, all right? Hey, I wait for this sifu, I wait for the media to tell me. What is the problem with this? What is the problem with this? Think very carefully. Many times, we never learn from our lesson, right? We always want to listen and things like that. So what we do, one of the things that we do in Trade VSA is our Telegram support, where our members will ask this kind of question, and I normally answer them within the day or so. These are very personal things. They send me, Martin, it's a good time to buy this stock or that stock. I say, I'll look at it. I think, yeah, I'm buying it, and I think you should. So those are the things that we try to support in our member. So at least you get an honest feedback and opinion from myself and also from my team. But for those of you who are not supporting important. Who do you rely on? Do you still listen out for tips? But if you're not, let me share with you one technique that perhaps tonight will tell you what is the best time to look at. So definitely you want to look at market correction. Now, market correction after the market bottoming reversal. All right, we are very close to it. Okay, now correction is the best time. If you are generally a average person, you will hate this. You'll be scratching your head. Oh, market's falling down 10%. Oh, I'm suffering. I'm bleeding. All those. But of course, for those of you who have followed me for many years but have not joined our masterclass, this is definitely a chance for you to understand what is correction, all it means. Now, we usually use the VSA 360, which is a new tools in here, to select the best problem month to enter. And many times I tell my client and also my member in here, if you have some fund to be released, or you currently have it in fixed deposit, or you're selling the house, now you will know what is the best month to be looking at, right? Because timing is important. You say, hey, remember last year we talked about during October and November, right? Those of you who follow me, I said the best time was to buy was end of October, beginning of November, and then we had a great run in the US market. And some of you who have bought it and some of my students who have followed me there, I think you all benefited it. Of course, right now, again, it presents another good opportunity there. So the VSA 360, it's something that you definitely need in your tools in here. And then, of course, coupled with our masterclass course and the teaching from our coaches like our senior coach Fu, Marina, Arif and Zach. Also, don't forget, many of you are not beloved Zach will teach you all the trade setup to minimize your risk and maximize your return. I think that's also important in here. And then finally, what are the best trade VSA pattern given the condition of the market, like the market stages that we talk about. So those things, let me refresh you again. Very important. Okay, now if you look at the chart above me in here, what are you looking for? Can someone share with me in here? All right, what are you looking for? Okay, not easy, isn't it? When you look at chart, if you're not trained, what are you looking for? Let me help you. Okay, so generally what you're looking for here is market bottoming. So you want to be looking at a support level. Definitely from the chart out here, let me just draw this. Okay, and you can see there is a support level here, correct? So that is usually likelihood the market is bottoming. And we did have that earlier on here. You can see this was at, but as soon as the market broke through this level in here, and we all know what happened at this point, isn't it? That was in sometime February, March 2020. That was the COVID, okay? The COVID pandemic that hits the whole right world. And then January, the market also recovered back to 2021. We have a nice run in here. And right now, this is where we are. Again, you can see our trend is pretty much in a sideways trend. But does that mean our market has bottomed yet? What do you think? Type it in there if you think our market has bottomed yet. If not, let me know. I'd like to hear your opinion too. All right, let's go on to our next slide. Now, what we are trying to do is beside looking at market bottoming level, just looking at the support, what is important is the correction. I remember, take this, correction level. And why? Why do we do that? Why do we know, or why do we need to know the correction level? The correction level is what I just talked about, the percentage level. If you look back here, I know it's a bit small, so let me just enhance here. You can see the percentage. Now, if there will be a market crash, like what we saw in the COVID here, this was, let me just put, this was the COVID-19 pandemic. All right, this was the so-called US-China trade war. Okay, this is number one, and this was number one, this was number two. You see China, and then market finally fell off. Okay, and then we have this recent correction too, which is quite normal in here. We have another correction, right? And then we have another correction in here. Of course, we did see the December, right? Just 2 weeks of market rally, and right now the market is testing it back. All right, so I have mentioned many times before, these kind of levels is important. So right now, if you can see here, if you're not, I'm going to move on to the next slide. It's around the minus 5%. So the usual correction that we get, right, the big ones about 12 and 8.5. This is for our KLSE. All right, so keep in mind, we need to know what is the bottoming level in here. All right, so this is important. You can take a snapshot in here. Now, why we need to know this, especially in terms of money management. Now, many times, many people, because they are untrained, they always put a small sum money. You know, I put maybe 10, 20,000 ringgit inside there. Make also, you don't make a lot. Lose also, don't lose a lot. But it's important. What we do in our masterclass is to teach you how to manage 200,000, 300,000, 1 million, 2 million. So you have that confidence level, all right, that confidence level to manage big money. And one of those is definitely knowing the drawdown level before you go into a panic mode. Right? Because a lot of people say when they lose $50,000, they go into a panic mode. Oh, that is the end of the world. I have someone came to me recently. He has about 300,000 and he lost only 50,000 ringgit. So when I calculate that, I say it is only a 16% drawdown. But if I look deeply, why was the person going through this drawdown? And it's because it did not have a methodology. So that is one thing. So if you don't have a methodology, you simply tembak here, simply tembak there, and that's why you get this kind of drawdown. And he doesn't know why the purpose of he's not making money. Despite, you know, we've seen good markets, a lot of support we've been given. We even have a masterclass portfolio for our member to follow, and it's in our VSA 360, that one. That's more for the long term. So we do this to ensure many of our paid members in here get the support and get to you know, have the great portfolio that I'm doing for myself, building my $1 million portfolio. As I said before, the long-term portfolio is to help you to make that $1 million portfolio. So what are you waiting for? Right? I always said before, are you waiting for the market to crash? The market may not crash yet. So still waiting after we have seen year 2021, year 2020 being a very good year. Trust me, the methodology that we teach you looking at market bottom will give you an edge compared to anything else by looking at volume spread analysis. Now, if you look at the KLCI right now, we are in a correction mode. Okay. Now, what is the correction there? If you notice, we are at 5.7%. Now, this is one of the features that you will have, and of course, go over to TradingView and do this, and you can get this indicator. But I'm going to show you one of the automated new indicator that we're having. So what are the criteria you'll be thinking to buy after a certain percentage correction? What is those? So keep that, write that down on your thing. What is the percentage that I'm looking for? All right. That is also another level we want to see. What is the correction level that we see in the KLCI right now? I think I just mentioned to you in there, right? And then finally, can you remember what we teach you in our masterclass? What are the kind of trade setup you're looking for, right? I think my chief trainer Zach has talked about this on the second day of the masterclass, and also Fu, remember we talked about those, isn't it? Right, buying in, and also Coach Arif talked about bottom fishing methodology. Go back and look at the notes that we have shared with you in there. That will definitely re-jot with you. If not, do come back for our February, after Chinese New Year, we'll be doing our February 2022 first masterclass intake. And of course, if you have signed up earlier, you have unlimited attendance as long as you continue to renew your membership. So that is definitely one of the big benefits that you will get: constant coaching, constant support from us to ensure you have a better chance of succeeding if you're really serious about making money. Because I've seen many people come into the market not willing to invest in themselves. So using very unskilled tools, listening to Sifu, and sometimes if you think very deeply, you know, you can't blame them. You know, they in mind want to refuse to invest in themselves. So it's always important, know what you're going for. Investing is a game of merits. It's not a game by chance. If you're not prepared, be prepared to lose. All right? That's my lesson to you. Now, also, if you look at the US Dow Jones in here, what are you looking at? Now, very similar, same thing. We are looking for correction level. We are looking for correction pullback level in here. So you can see from here, all right, just going on to the next page, all right, we want to look at the monthly return. Now, the earlier from our VSA 360 in here, you will know January also is a very bearish month, and so far we have seen minus 6.5%. This is a diamond ETF, right? We noticed December was also good, so right now you know December month is very good. So this information, so which month will recover? Having said that, February and March is likelihood to be the the US Dow Jones will recover. Compared to Malaysia, maybe have to wait into April, but overall returns still negative. So sometimes I think very clearly, if you are investing in Malaysia or trading in Malaysia, and if you lose money, is it any surprise? No, isn't it, right? Because you already know you are trading a sideways market to a down market. Whereas Dow Jones, you'll notice, right, the yearly returns about 13% return, and that's the one you know. So same thing, if you're going to be fishing, which pond do you want to go to fish? Do you want to fish at the fishing pond that have no fishes, or do you want to go to a pond that is fishing? And sometimes we have all this fear. It's because maybe we are unskilled, or maybe we don't have the kind of support that we need from a community like the Trade VSA, and that's why we are here to support you. That all right. So looking from here, it does look like February and March maybe the good months to be looking at. So keep that in mind. So that is one of the first clues that we have. All right. Then next thing is that when you look at the US Dow Jones, what do we want to see here? So usually in the trading view, we will draw all this. You can see this, right? We'll manually draw this and try to find the drawdown. In this case, it's 12%. Here's another one. And we have to manually draw from here, right at the bottom. Another one. This is the current market correction that we see. So if you put that in mind, that's something you have. So first one, you'll see the 2018, the trade war, we have a 12% drawdown. Then we have the 20%, which is the trade war number 2. After it recovered, it draw down another 20%. Then we have the COVID. Now remember, compared to KLCI, our CI never made higher, but the US Dow Jones actually made higher. If you look back, if we didn't have this COVID, you raise this, right? The market will still be going higher. You see that? Let me just repeat that again. If you didn't have this COVID fall in September, the market will still be going higher. So what does that tell you? That simply tells you that market correction is God-given to us for trader and investor. And right now, tonight, we have another 10% corrections in here. Of course, some of you are saying that, can it get more to 15%? It's possible. Definitely possible. But we'll show you a simple and easy way to enter to ensure the level that we're going in is likely to be the final level in here. And that will be our peak valley line indicator, part of the market stages that we talk about in here. Of course, this one is the COVID-19, and this is the interest rate that everyone is talking, from the analysts in the Bloomberg to our researcher economics in Malaysia, which is the 3 interest rate hike for year 2022 and 2023, which also our Malaysian economists are talking about it too right now. So if you look at the US Dow Jones right now, we have at most, this is a weekly chart, from the high of 36,800 right to 34,529, and tonight we're not too sure, but I think that likelihood the selling has stopped and start to move sideways right now. So this is very important. Point number 1. Professionals know the difference between market correction and market crashes. Amateur fear it a lot. So you ask yourself, do you fear the market correction, or do you see opportunity? Very, very important. Now type it in there. You see market crashes or you see market opportunity right now in here. Because amateur can only see danger, amateur can only see fearful, right? So you know who you are, whether you're a pro or you're amateur. 2. Okay, the market correction is close to the historical level of -10 to -12%. All right, historical level -10 to -12% in here, and likelihood is Dow Jones is to buy on dip. The buy on dip strategy is on right now. Okay, the question is, what level do you be buying? What is the setup that you're looking for to buy this stock? Definitely, I'm ready with my own money to be buying on the US market in here with the right tools too. Okay, so let's look at the anatomy of a market correction in here. Okay, market correction in here. So if you look back in the current bull market going back to 2010 to 2019, you'll see in the current bull market there was about 9%, 16%, 22%, and these are the area where the market correct back. All right, of course we have 2019, 2020, the market actually crashed back, right, and then it went back higher. So right, like it or not, all things being said, if you hear this talk in 2028, the market will still be higher. Trust me for that one. I've been long enough in the market, and there was just one pure reason about how the stock market is. One is because inflation. Stock market goes up because of inflation. All right, because the amount of the prices need to be raised in order to make the to cover back the inflation. That's one, because our power of our money is being eroded every day. Second is also the US FOMC continue to pay. And if you look at the price of your handphone, right, you're pretty much paying what you are, but you're getting more value. And in such respect, more sales, more unit being done, that creates a better earnings, and those stocks usually are reflected on the benchmark. And that's why you see stock market will continue to go up even by the time you join me on 2028. Right now it's 2022. Another 6 years from now, I will still be making the same talk, yet building the wealth that I wanted to build. And I do hope you will also enjoy the wealth that you're doing, provided you do the right thing here. All right. So if you look at the US law of averages in here, this is what typically look like an average correction. All right. It says in here frequency about 1 correction per year. But right now with the market volatility that we see, it may be 2 or 3 more. Next, the length of it is about 71 days. And if you notice this one in here, again, law of averages, usually the correction happen in July. But usually what we do, we use the VSA 360 monthly seasonal, and we can find out which year they actually just now we were talking about January, the correction. So likelihood February and March, it will pick up in here. And a very short one, but these are the big one, and you notice average about 15.6%. So right now it's about 10 to 16%. So be ready now. All right, give you a hint. If you hit around 15 and 16%, buy. That's the level that I'm looking at, right? Market may just move sideways, takes average. I don't think it will take 71 days. Probably in less than 30 days, the market will pull back and you are already in the money. Of course, during that time, you will see a lot of the media was telling, oh, this market's going to crash. Oh, Jerome Powell may not do this, and all the bad news. So remember, you are a pro if you've been listening to me long enough and far enough. And if you've been coached by us, you need to know that professional don't listen to many of the big head that talk rubbish on the Bloomberg. Okay, you always need to go back to the charts, look at the tools that you have, and then you will decide for yourself. That's all we ever do. The only protection against market is to remove the ignorance that we have in here by listening to some media and they talking. And that's what I learned over the last 10, 15 years, able to survive so long in the market, able to prosper, is to ignore some of the pig hits that I've seen on TV telling you, oh, this market going to tech stock is going to be like rubber glove. Forget them, okay? Ask them for their track record, not just 1 or 2 trades or 8. Look overall the last 10, 15 years. How well have they fared and how are their methodology in the way they are talking in here? Okay, so that's also important. Now in today's dilemma, what we are seeing right now is, question is, many of you saying, if what Martin you are saying is quite true, we have a market correction, right? What are the sector likely to turn green if there's a market correction? Okay. Question 2, what are the worst sector likely to turn green if we have a market bottoming right now? What are the tech sectors? What are those tech stocks? And third, what sector should I be watching? Or even, do I have the right tools? Now, if you don't have the right tool, you probably have to go back to one of these so-called desktop login trading platform and pick one by one. It's time consuming. I'm not saying it doesn't work. It's very time consuming in here, but most of the time you end up with a lot of time filtering what is not right. So what we have done is our trade VSA looking into our sector analysis. Now if you look from here on this sector analysis, you have seen right now everything is already red, right? The more recent one is the 25th of January. Energy has already turned red, but what is green here? Green is green pentagon, right? That's the green pentagon in here. So right now, just turned green pentagon 1 day ago is Plantation stock. Now, if you don't have these tools, you may not know Plantation is the right way to be looking at. So right now, I'm very keen on Plantation because why? Very simple. A lot of the CPO prices has gone up to 5,300 ringgit in here, and with La Nina has continued to go higher. So a lot of those stocks, which is actually at a nice space, we'll be looking at. So the first dilemma, we already talk about it in here. All right. So let me just show you very quickly what are the tools that we are using right, to get into the market. And this is our VSA 360 in here. If you don't have a copy, we highly recommend you to get a copy of our VSA 360. Then you will see some of the tools that we are getting and you will never be blinded. I know some of you have been following it in here, not doing the, let me just bring this up again. Okay, this is our VSA 360. So I enlarge this a bit, all right. So going back in here and let me just log in again, 360. All right. I wonder why I can't. Okay. So this, let me just get back. So you can see from the 360 here, okay, and just give me a minute here. Okay, I probably have to, there's something not right about my login here. So I'll just probably have to continue where I'm going to, right? And later I'll come back to and share with you how to do this. Okay, so what we have from here is the monthly KLCI sector in here. So from here onwards, what we are looking for is the potential stocks that's likely to turn. Okay. Okay, likely to turn green pentagon in here. So right now what we have also, we can also look on the US side. Okay, on the US side, you will see in here, everything has turned red pentagon. So from here onwards, we want to stream in and look at those that just likely to turn green pentagon. We can see energy is definitely one of them, but of course these are the one that is potentially showing you that the market is likely to have turned bottom in here. So we also turn to the charts, we turn to the sector, and then the sector we go into the right stocks that we show. And I'm going to show you shortly in here. So I apologize for not able to show you the KLC sector in here. There's something funny about my login. Earlier on I was able to log in, but right now I think my my login password has something to do with it. I apologize for that one in here. If you have the same issue, let me know. Okay, now also last week, those of you who joined us for our 3-day showcase, I've shared with you one of the ways to make money using the intraday, and we did talk about the market stages in length. Okay, so right now we're going to be introducing the market stages together with a new indicator, right, to continue where we left off last week. Okay, a lot of our talks are continuation. We have stage 1, which is we all know this is accumulation, stage 2, stage 3, and stage 4. So these are the 4 stages that stocks will need to go through. Of course, some of the intra best trades come from stage 2 over here, right? So after we have in the stage 2, then we have avoid the stage 4. Okay, we want to try to avoid the stage 4 in here, and what we really try to do is to measure how much is the what we call the swing from the bottom of stage 1 to stage 3, and this is what we are looking for. We are looking for that magnitude of that swing. At the same time, we are looking for that magnitude from stage 3 right to the below, the percentage, what we call correction. You understand this one here, this concept? So rather than just looking at stages, now we want to do measurement. Just like we want to measure how tall the person is. For example, this person is 5'6" or is 178. So we are doing the same thing too. So when the market go through what we call a stage 3 to a stage 4, and usually they have this what we call a correction point. That's the one we have been talking about, right? 10 to 11%. And you'll remember just now, minus 15.6%. That's the one we are looking at. So by knowing that amount, that to me is a very simple and easy way to understand how much the market is going to swing back up. Because like it or not, the market is like a rubber band. Every time when it gets stretches and pull, it will snap back. Why? This is because the market, just like I said before, will continue to move higher if there is no big recession ongoing. So right now we don't anticipate another big recession going not at least until 2024. So with that in mind, keep it the stage 3 to the stage 4. This is what we are looking for, this kind of correction in here. Just let me show you here. Okay, so you have this point to this point here. What is the percentage correction? This is what we are looking for. Okay, and the same thing goes from here to here. What is the percentage of that upswing, uptrend swing? Uptrend, this is the correction, or another word we call downtrend. Downtrend swing. Okay, uptrend swing, we also need to know the percentage. So by knowing this percentage, you add a lot of a certainty, a lot of accuracy. Now remember, every stock is different, every market is different, because based on the local dynamics and local condition here. So by using and understanding that correction, we will know where to move on. So remember, we have the market stages earlier on, right? We have seen when the market move up to this level in here, where we saw above the red line, that's where the danger point is, right? But we're going to add one more level of comfort, a level of confidence to it in here. And the same thing if we go down to the right, to the bottom, where we see red bars, right? When the market go to red bar, it's actually going into a stage 4. Now these indicators are available for you if you are already a member. If you're not already a member, we have a Chinese New Year promotion in here. That's something you want to consider. Subscribe to our system in here and able to use this together in here. So and remember, the vertical column, the bars, these are representing the intensity of the market moving up in a stage 4. So what we do, we added up one more. Okay, so I think Zach covered a lot in our last week. Zach covered this in our last Wednesday, and those of you who came to our showcase VSA, something which is promoting our masterclass for this coming February. That's the one we've been talking about. We have the zero line level in here. Green bar means the market is moving up. Then we have the gray line moving sideways, and then the red bar is downtrend. So what we want to do now is introducing the Trade VSA peak valley. All right. So if you look on top of me here, it's a very nice background of a mountain, right? We see the peak, we see the value, and usually when we search for the peak and valley, it's very manual, very visual. Okay. Now we have a solution right now. We will be releasing our peak valley indicator on the coming masterclass. That's actually about maybe 3-4 weeks from now. We are still testing this, and we find it's very good. So we are coming out with the right trading plan for you. So what we have now is to have this market swing up and swing down, peak to valley. All right. So here's one example in here. If you look at Dow Jones right now, we can see this is a daily chart. A daily Dow Jones, you can see there's a lot of correction. 5% correct, 6% correct, 3% correct, is swing back up. And when you swing back up here, another 10%. So that very quickly, from the bottom to the top, you will probably know what percentage, right? You see, you look back here, the last one was 20%, 8%, 14%, 4%, 6%, right? So that means if the market corrected, you will certainly know by looking on the left-hand side of the chart. This is your visual, right? By knowing how much the extent of that stretch, you will know, for example, PRC historically is only 20%. I don't think can go 30%. This is where you keep your greed in check. You keep your fear in check, because the market will always swing down. Right, now this is a daily chart. Now if you turn on to a weekly chart, what can you see here? You look up here, right? So this is the peak and valley in here. So you look at this again, you will get this for our new members and also our combo members. You can get it. And for those of you who have not it yet, you might want to join us and get this indicator as part of the combo package which we are promoting for the Chinese New Year special in here. So this is so you can see from here, the market went up by 36% from this bottom to this. If not manually, you have to draw it, and then you have to use a calculator and calculate. Very troublesome lah. Right? We want to make life as simple, and it's also very easy to very quickly. You can see the last time when the market swing down was 38%. Every time when it go up 60%, there's always another one swing here. But you take note, right? 10%, 6%, 11%, 7%, 20%, 13%. So you know the 10 to 11% correction is already there. Right? And this time, give it a bit more because of the interest rate rise. All right, so I'm ready with my money to buy. And even if you buy, I know the market will swing back up because it's like a rubber band. You swing down, right? It will step back up, right? Swing down, you go in and then step back down, and you get that simple 10 to 15% is just going to swing back up here and here. That's how you want to trading on a shorter term. Of course, for those of you longer term, market continue to go up. This is where you use the VSA 360 seasonality to time to it. You know which month you want to buy. You know what is the correction level in here. You know the trade setup, whether you want to use a spring, you want to use a no demand, you want to use a double bottom. So all those combined, it will give you the best entry at that. And that's what we are proposing here to our new members. So the Trade VSA peak value summary is that you can measure now how much is the correction and time it to a T to when the timing to the reversal of the trend, okay? And then you couple it together with market stages, right? Like just now I've shared with you very quickly. When the market go through what we call a peak area where we see a lot of red line above the danger line, which is the horizontal danger line, and then you have a swing more than 10-15%. That's a time you want to be taking profit. But a lot of amateurs, when the market swing up, because they have no notion how much was the market uptrend swing, they do not know much of correction. That is why they always buy high, correct? Now you know why you buy high, because you do not know the level of the market swing. So with the peak and valley in mind, with the market stages, right, it offers you a window opportunity to watch for earlier trend reversal. Remember, early bird always catches the early worm, and this is the same thing what we are trying to do right in here. Now, of course, with our full suite of Trade VSA and our masterclass training, it made trading and investing more accurate and easier for you to understand the correction and reversal. Now, let me know what you think about what I've just shared with you here, the peak and valley. All right, type it in there. Now, we're going to be looking at plantation stocks, energy stocks, and finance stocks. Okay, so plantation now has a lot of good stocks that will be coming out in here. So type it in there. If what do you think of the peak and value? I know it's a bit early. Some of you may have seen it yet. So let me just show it to you right now. So let's look at some plantation stock here. So first of all, we will look at maybe my favorite is Hap Seng. Okay, let's look at Hap Seng here. Hap Seng Plantation, which actually came out on the green pentagon. Hap Seng will be S plant. Yeah, Hap Seng plant here. So you can see Hap Seng, the last round where the swing up is about 29%. 29%. So now you'll notice that this swing is about 14, 18, 17. Yeah, still got a bit more room to go. So very quickly, this you already know the thing is swinging up, and this is a very nice trend going up. You got green pentagon going up here, and you know that peak is up. And of course, if you are trading intraday, isn't that great too? Let me show you another one using Apple. Okay, AAPL. Now I'm just going to put in also the market stages. All right, where's my market stages? Turn it on to. Not this one. I have to go to my group. Now I'll show it to you later, okay? So market stages. Let me get my market stages here. My script. Invite only script. Where is my market stages? Yep, that's the one with the danger line here. So you can see right now, this is Apple, okay? So if you look at Apple, this swing is more than 15%. Right, and you notice we already hit the green area here. The green area means this is a safe zone. All right, don't be selling. Thing to buy. And we have the last swing. They have about 12%, 4%, 10%. So we have 15% swing in here. That's good. So what you want to do is to wait for the purple line to come in, or you wait for a formation. And usually what we say that look for the what we call a double bottom forming here, and the double bottom on the indicator. You look back on this one here, you can see a 1, 2, 1, 2. That's where we feel the trend has ended. And the same thing what we are doing here. We saw the first leg here, left hand side, and that's one thing we talked about last week, isn't it? All right, in the market stages here. So right now with the 15% swing down, right, and you can see last round when the next swing up, you're looking at 24%, 30. So this swing down you can do a projection swinging back another 20% up move from here. So right now, even if you don't want to do market timing, right, if you're longer term, I think at this level in here looks pretty good for this market. So that's really one of the level to know how much is that what we call a stage 2 sell down from here. So this is definitely a fan of those of you who really want to know out here. Is the peak and valley for midterm? Yes, for midterm, but you can also switch to a shorter term and you switch it to a 15-minute chart. You can see, right? 15-minute chart is okay. So right now, if you want to be buying when the market go down to 2-3% in here. So the market, let's see now, hit 5% here. It's coming down in here, right? It's swinging down already. So you can actually wait too for that one. You can wait for the swing down, the swing up in here. So you can use from a daily chart. So very quickly in the 15-minute chart, I know the market swinging down. I see some sort of support because you know why? You can see 1, 2, 3 above the market stages. That's why the market go through profit taking. And if you want to buy, wait for it to be down here, or this seems to be a very good area to be looking at right now in here, because you can see the market staying above zero value. And if the market were to turn back up tonight, you can see touching 163 tonight. That's a pre-opening of the Apple chart. Okay, let's take a look at the other stocks, like which is really based on like Inari. Okay, so you look back at Inari, again switch to a daily chart here. You can see Inari has dropped more than 21%, and you can feel that, right? This Inari is going to snap back very soon. That's right, it's going to snap back very soon. The last one, it made about 40%, another 14% down, 10% up, another 20% down. Here you can see. So from here you can gauge the swing down 20%, 21%. So it's almost there already. I don't think the market is going to go down very much. So we know that, one, from the percentage of the drawdown, right? Secondly, reason why you think deeply, right? Many of these institutions also got money. So when the money draw down to a certain level, more than that, they have to go in and buy one because got margin call ma. So that's also one of the psychological region in here. So when we study this swing down in here, coupled with our market stages, we can see now it's over. So in here, getting ready to swing back up. Of course, you want to see the right sign of strength, maybe with a 2-bar bottom reversal. You want to see some springs in here. That's the time you want to really be buying for that one, okay? Or you want to wait for the green pentagon. So what we are doing now is adding more accuracy, more timing into the market in here, right? And this is something that I feel that very, very good for our user here, okay? Any stocks that you want me to look at, just type it in there. Else, I'm just going to move on. Now, we talk about Plantation. Let's talk about this oil and gas, hibiscus, okay? So look at hibiscus here. So you look at hibiscus in here, continue to go up 30% in here. Last round we had about 50 over, 30 over percent, 30. It's almost there already lah. If you have bought it around the 8-10% in here, so you got another small room to go up here already. But notice here, it hasn't gone up to the red line yet. So it looks like it still can go higher. Okay, hibiscus looks good. So that's one of the things, and you can see this is a pullback. That's how you want to be going in. So you know that the swing up due to the past, how much you have swing over 40%. So you still got another little bit more room here to swing up from here, 88 to perhaps 94 cents. Then you have that confidence to do it in the shorter term. If you only pick those stocks that you want, rather than picking any stock. So this is definitely one of the tools that definitely helps you a great more in here. Okay, let's look at Microsoft, all right? So Microsoft is right now at 20% in here, and it's stopped to move sideways here. Last round with the biggest take 9%, 8%, and 8%, 15%. So to me, this 19% drop represent a very, very good opportunity to be buying. And you all know, right, Microsoft, you can see, right, pre-opening at 304. So the market was going to turn up soon. So Microsoft is definitely a buy area, right? 289 to 304 in here. So those of you who want to put in new money, that's the one. Let's put in Genentech, okay? Genentech. Genentech, this is a daily chart. You can see the market has swung down about 30%, came back down 20. Now, if it can hold this level in here, I think there's a potential. You can go back 23, 22, 43. Now it's only 18. Okay, 18% here. You can see the last time when you go up about 8 daily, about 40 plus 40, 28, 47, 22, 23, 43. So you can see this is probably a beginning of this trade, but he has popped back down, so we have to be careful. So if you were to buy this at this level in here, right, then there's probably another swing down. Okay, another swing down in here. And if you were to do this trade the way I see it, right, from chart wise, I will wait for it to cross up above the zero there. That's a level I want to be buying. And then you can see this market breaking out, and then you have a little bit more around the 40%, 20%, another 20% upside to this. Okay, that's trading on the very short time frame in here. Let's take a look at dialogue. So on dialogue in here, you can see, this is a nice pullback, right? We can see 16%, 15%, 22%. So this is a very nice pullback here. I think it's a good chance for you to be buying. So of course, when you use this method in here, I will assume you have some training for us. Then you can disregard the Pentagon guider and go in a bit early. You can see it's already turned what? Turn above the zero in here, and it's a nice one. It looks like you already picked below in here, right? And the last one, 15%, 15%, 12. Yep, that looks pretty good. Okay, I hope you all like this. TQQQ, okay. Right, TQQ bottom at 44%. That was the longest one that he had. You can see, switching to a weekly chart here, you can see 47, 32, 72. That was the biggest one. So 44 is considered to be very, very huge. But usually for TQQQ, just look at IXIC lah. IXIC, which is the Nasdaq one, it's better that one. You can see 19% in here. The last correction, this was the big one. You can see the big correction in here. And if you look back from a weekly chart, switch to a daily chart, you can see 8%, 7%, 8%, 12%, 17% is really extreme, really 12% in here. 32. The last one that he had was 32, 20% here. That was the COVID-19 pandemic, right? You know, this correction. So this one is a bit overdue, right? So now is actually a good time. So when you think that's a good time to be buying, go to your QLD or the QDD. All right, let's take a look at AMD. AMD also same. You can see 31% correction. Last one was 20% correction. And to me, that represents, I've never seen anything swing so much before, which is really out from the norm. And if you were to get this, I can tell you what, if the market were to go back up, and I do think that once the interest rate goes up, once they price in, it will go back and retest back the 160. This is the best correction. You can see some 18% correction. Throughout the entire, you will know the kind of correction. So 31%, and no, right? We are not in market crash. Correct now, just like Microsoft also happening the same thing. So with this in mind, doesn't it give you a confidence? If you have, just type in confidence over there. Okay? To know how much the market is swinging. Okay? So you always know roughly where is the market bottoming. Let me know what you think of it. Does it give you the confidence? If it does, just type in confidence over there. All right, so what I want to remain is the other energy sectors and also finance. All right, the energy and finance here, and sector plantation, there's a lot more in here. We can look at a couple of them, right? These are the stocks. So the key to preparing a good seller before we go into the stock is to trade with a profit edge, that you have all the VSA indicator. By joining us, our package in here, you will get the recipe, what we have just shared with you before in here. Right, and also so you can switch between the daily and weekly and intraday chart to trade, knowing the swing range, how much is the minimum, how's the maximum, like what I just talked about, the peak and value. And then finally, in our next coming February, once we release this, we're going to be coming up with a very simple rules to maximize your gain and minimize your risk. What do you have to lose, right? And more to gain through our masterclass. Okay. And some of the energy stocks I'm going to share with you, it's a safety stock more, is Charimin, Coastal Contract, and accumulation is capped. So let's take a look at them before I end the session here today. So let's take a look at the other one is, what stock are we looking at? Charimin. So you notice Charimin is up at 51, now has started to pull back here, okay? Yes, pullback here. So this is actually a nice pullback, a 2-bar pullback in here. Trend is look like still going up, and let's see whether he can go. He hasn't turned down yet, so that looks pretty good. All right, so this is one of the safe stock in here. A nice pullback, and guess what? You can see still staying above the zero here. And the next one that we have is coastal contract. Now coastal contract has pulled back 20%. Very good. You notice last round it pulled back to 44, and you have back a line change in here. So perhaps that downtrend swing is down. Okay, we are turning into an upside here, right? If you were to go in here, put your stop loss here, and you can see 100%. Wow, this one 100%. Don't go for 100% lah. Just go for 10, 20%. Okay, 14, 5, 40%. So you know where this thing is going to swing up lah. Right, and still staying above. Okay, this is daily chart. So with that, do you have a confidence? I think so too, right? With this, you know how much was the pullback, 20%. Right now, this market is really testing now. Okay, so with the combination, like what I talked about in here. And last one is cap. Okay, cap Cabaran, switch to weekly chart here. You can see it's still moving up 38% in here. It's gone up by 37. It's still holding up. I think this one looks pretty good. Make sure it's in the right sector. If it's in the right sector, then the chance of making money a lot more. Okay, let me just quickly sum it up for you here. And the US market, what we know so far in year 2022, the inflation is rising. Okay, interest rate is rise. We know the Omicron has led to some lockdown, but they are opening right now. Now, the only thing we are kind of worried is US Fed will stop their Fed put, which means they are not coming to every market collapse rescue. Right now, we haven't gone to the collapse yet. We just have a correction, and I share with you the 10-15%. Very likelihood once they make this announcement that the interest rate is going to rise by March or so, where the market will tend to rally back. Of course, look at the news. Remember, we talked about the likelihood to correct will be in the month of February and also March 2020. Okay, so those are the dates I have talked to. And what happened if when the interest rate is rise? You can see here the last interest rate is rise here. This is Dow Jones over back 2005, also go up. Here interest rate goes up, right? You can see the Dow Jones also go up, right? So it's not market crash. It's just merely a correction, and every correction, a professional like yourself, you are a professional, aren't you? You are. Then you know this is a good time to be buying in here. Same thing in here, likelihood. Another one, interest rate. Same what they say. So in 2023, we'll see three interest rate hike. One will be in March, September, and then February 2023. So after they were talking about March. This was earlier on May. They may bring it back to March because inflation is higher. They want to raise it. Then after March, if they talk about it in here, then the market will start to move nicely in here. Okay. So again, use the for this coming February 2021. February 2022, we'll be releasing the peak value line for all our members, and I do hope that you who is listening will get a copy of the peak value and our market stages with our trade VSA to benefit from this nice swing. And remember, buying on dip is still a good strategy in 2022. You can see how much of the pullback that you have. The big one was 2022, about 35%. And I'm showing you, right, all this drawdown, the negative one, right? It's the one that we draw automatically by the peak and line value in here. All right, so has the market bottomed yet? What do you think? I think likelihood the market has bottomed. It may go a little bit more as we've seen from the peak line value in here, but we are very, very close to the bottom. Of course, we would like to see some VSA, very strong formation, signs of strength coming in here, and volume turning from very, very high to very, very slow to couple. It's like part and parcel of making a salad in here. What are the safety share to look at now? Definitely some of the sectors I talk about in here. Plantation has turned green Pentagon. That's the one which is, to me, will see a little bit more movement after the Chinese New Year in here. And the oil and gas should be continuation of the US. We'll see the oil and gas in here. That would be my conclusion for tonight. All right, so one of the benefits of a trade VSA to aid trader is we do see year 2022, the market stages with the peak value is a window of opportunity, okay, to find where is the next reversal. All right, so it's easier to understand. We continue to update and improve our information given to all our members at no extra cost in here. Then they will find the maximum peak and the maximum correction. Then they will know where to go. We can use that also for your target profit in here. Take a lot. Let's say your stocks already been running 5-10% and you look back in the historical, right, can go up 20%. Let it run some more lah. Why you want to let go so much, right? So you do not play into fear, you do not play into greed. That is definitely good for that, all right? And then finally, it's only available when you join our Trade VSA, and we are doing a promotional package in here. Get your peak value lines on February 2022, I think in 2 weeks time. That also coincides with our February intake for our masterclass, which is what we have been doing right now since last week, promoting our masterclass February 2022. And of course, if you are already our masterclass member in here, you get to join unlimited of the seminars that we have, and many. So from here in here, I'll be taking a 1 week break for the Chinese New Year. So I'd like to wish you Kong Hee Fa Chai. And don't forget our promotion right now, which goes into 30th of January, the combo plan, free 3 months, which is our masterclass. That's a combo plan, and the 12-month free 2 months in here. Final but not least is we do have monthly installment in here. You get the VSA 360, you get the peak line indicator, which will release. You get the master stages in here. You also get some of our deep value investing course, all right, and so forth. And also our coaches will be there, available with our 25 years experience to continue to coach you and map you. Just think of the value that you'll be getting, huh? All right, and of course, some of the advanced technique, including what are the tools that you can use for intraday trading, speaks for itself in here. Thank you all, and of course, don't forget to review us on Google Play Store. And if you're interested in our masterclass, that's the number you want to be calling in here for all things related to trading event. So I wish you all the best, and if you want me to look at a couple of stocks, I will end here. Of course, Zach will be teaching you on our after Chinese New Year. We will talk more about the peak line and the kind of strategy you'll be using. So make sure you join us on our weekly members training for that one. That will be something we want to share with you in here together with the market stages. Thank you so much in here, and see you all. Bye bye.